Hello guys, welcome to my screen. I'm very excited to share this video with you guys. Okay, and thank you so much, guys. I've been seeing the engagement on my platform, and you guys are doing very good. Thank you so much. And please, if you are new here, please don't forget to subscribe to my channel and give me a like, and also share this video. Okay, for today I'll be doing something real quick. Okay, I don't want this to take long. Okay, because I got some comments on that I should drop a video on. Okay, it said what time frame is best for you to take a trade, or what time frame do I look out for before I take a trade? So that's one of the question, and the other question is, what is my entry criteria? What is my entry criteria? And the other one, what time frame is best for me to take a trade? I was supposed to do a video on each of these questions, but I feel that maybe the video would be too short, or something like that. So I just had to merge the two questions together and figure out a way to answer the two questions at once in one video. So first of all, we'll go with my entry criteria. Okay, I think like this on my screen, you can see I already did something here, though this is a weekly time frame. Okay, this is a weekly time frame. You can see I did my analysis here already. You guys know that I always trade GBP USD, but I'm just using Euro USD for this analysis or for this video. Okay, so this is my setup here. Okay, this is always my setup: a sweep of liquidity, a break of structure, 50% retracement, another break of structure. You can see that this market here, this chart here, these candles, they did not break this low. So because they did not break this low, they had to come back to the 50% retracement area, and before they could break. Okay, break. And now I'm still expecting a pullback down to this area before a sell again. Okay, the reason why I'm saying this is because this is a weekly time frame. Before this pullback gets to this area, it will take over a month or two. You understand? It will take over a month or two before it finally gets to this area. So, but for my entry criteria, now this is it. First thing you need to know is for you to know your analysis. Okay, that's the number one thing. Know your analysis, know your strategy that you are using. How does the strategy that I'm using, how does it work, or how does it react to the market? That is the first thing you need to know. And secondly, you need to master it. You need to know how it works. You need to really know how it works. Sometimes I can get something like this: a sweep of liquidity, a sweep of liquidity, break of structure, 50% retracement, another break of structure. Then now back to point B. Sometimes after back to point B, I'll see a little pullback here. The market is supposed to just sell down to this area, but you know the market maker does not want you to make money. You understand? Sometimes the market will just pull back to this area, then come back to take out this liquidity here, because the liquidity will be formed here and here. So it will now come back to sweep the both of them. After sweeping them, before the market got pulled back to the downside, before the market finally pulled back to the downside. You understand? So this is it. The reason I'm able to say this is because I already mastered my strategy. You understand? It is because I already master my strategy and I know how my strategy works. So that's the reason I'm able to say this to you guys. Okay. Now, whenever I'm taking trade, I'm always looking out for my stop loss to be above this high. You understand? My stop loss is always above this high. This is how I normally take my trade. Okay. So my stop loss is always above this high and my target profit is here. Okay. So this is how it always looks like. So sometimes when you, for example, you take a trade, you said, okay, first of all, you saw the break of structure, you saw the sweep of liquidity, and you saw the break of structure. Let me mark it out so it will look nice. Okay. Here we go. So now you've seen a sweep of liquidity and you see a break of structure. Okay, because you already know your strategy, because you know the strategy that you are using, and you are familiar and you are conversant with that strategy. Now you've seen a sweep of liquidity, you've seen a break of structure. What comes next to your brain is, okay, now let me start looking for 50% retracement. Okay, now and when you find out that, okay, finally it gives you a 50% retracement, you can start selling. Or maybe you just want to be like, okay, I'm still not certain if this is a sell. You understand? You are still not certain if this is a sell. You said, okay, let me wait for my second break of structure. Okay, now you waited and you got a confirmation on your second break of structure, which is here. Okay, you got the first a sweep of liquidity, break of structure, 50% retracement. You've gotten another break of structure. Now, what you are expecting is for the market to retrace back to your 50% retracement level. Okay, it is two things. It is either you look for an opportunity to buy this market to this 50% retracement area, or you also have to wait. You understand? Or you also have to wait for the market to get to this area and then you start selling. Okay. Now, when the market gets to this area, definitely it's going to tap in and start selling immediately. But sometimes the market maker don't want you to make money, like I said earlier. So the market will just go down, go your way a little bit and retrace back into your your loss, into the loss. Okay. Now, one thing you should always take note of is, look if there is if either a fair value gap or an order block. Like now you can see on this screen here. Okay, you've seen the sweep of liquidity, the break of structure, the retracement, the second break of structure. Okay, now sometimes there could be a fair value gap or an order block within here. Now remember, this is a weekly time frame. Let me jump down to maybe 4 hours time frame and see if there is anything like that. Okay, is there a fair value gap? Yes, I think there is a fair value gap. There's a big gap here. There's a big gap here. Okay, even to this side. And also remember, what is another block? Another block is the last green candle that formed before an aggressive pullback to the downside or an aggressive pullback to the upside. Now, where is the last green candle that formed before the aggressive pullback to the downside? Is here. You can see that we've gotten our order block and at the same time gotten a fair value gap. You understand? Now, why before taking this trade, you've gotten your criteria that okay, you've seen a fair value gap already, you've seen an order block already. Now it's left for you to say, okay, these are my criteria, this is a fair value gap and this is an order block. Okay, let me see which one will I be using. It all depends on you. Okay, it all depends on you. You can choose which of these things you'll be using, either the fair value gap or either the order block. Now, if it's the order block, okay, you see, it just the market just tap in a little bit, but if you use the fair value gap, you see that okay, the market was in the trade before pulling back to the downside. Now you can easily take your trade from here. Maybe you take a 50% of this fair value gap. If you choose to use fair value gap, that is if you choose to use a fair value gap, okay, you can just take the 50% from this level to be on the safer side. Okay, you can choose to use the 50% from this level and then to minimize the risk of your stop loss. You understand? To minimize the risk of your stop loss, then you can choose to sell all the way down. Okay, you can choose to sell all the way down to this level here. So that is it. Understand? So you do not need too many things for confirmation. It is either you use your fair value gap or you use your order block as a confirmation. Okay. So for the other question, which says that if which of the time frame is best for us to take a trade? Okay, just like you've just seen, okay, just like I've just shown you guys here, you can actually see that I did not take this trade on the weekly time frame. Like I did not take the trade on the weekly time frame. I had to scale down to a lower time frame to look for a suitable position for me. You understand? I had to scroll to the lower time frame to check for a suitable position for me. Okay, so that's it. You need to maybe scroll down to, I can do my analysis on the monthly time frame. You understand? But I can't take the trade on the monthly time frame. Sorry, my network is okay. Welcome back, guys. So, like I said, if you want to take a trade, the best time frame is not the higher time frame for you to take a trade. No, I won't advise that. Okay, if you want to take a trade, I won't advise you using the higher time frame to take a trade. You can do your analysis on your higher time frame. You can know the direction of the market in your higher time frame. You can do whatever thing you want to do in your higher time frame. But after knowing all these things, you need to go back to your lower time frame for execution. Okay, you need to go back to your lower time frame to execute a trade, not on the higher time frame. Okay, just like this is a weekly time frame. Okay, I've done my analysis here. I've seen, okay, I've known the direction of the market. Okay, now what is left for me to do is for me to hop down to the lower time frame. Anyone which is best for you, either a 15 minutes time frame, 30 minutes time frame, 5 minutes time frame. I've also seen traders trading on 1 minute time frame. Guys, I'm not advising that, okay, but if you know you can also do that, you can do. But for me personally, I'm not advising you guys to trade on a 1 minute time frame. If you are trading on a 1 minute time frame, meaning you are good at scalping, but for me, I'm not good at scalping. Okay, so we trade, we don't scalp. Okay, that's one thing you need to know. We trade, we don't scalp. You can see all my analysis are top notch. Okay, we can easily cash up to 150 pips, 200 pips, 500 pips. Okay, at a go. You understand? For example, if we had taken this trade, now you can see it over 710 pips. Okay, 710 pips, guys. So it's better for you to trade than to scalp. When you are scalping, it's more like you are doing gambling. You are gambling. Okay, you are gambling with your funds. You are not trading. But when you are trading, you can take this trade for a week and you just relax yourself and you allow the money work for you. Okay, allow the market to play out the way it wants. But one thing you need to know is that your strategy is working. And guys, trust me, you guys know that my strategy is always working. Okay, it's always coming through for us. Okay, so that's it, guys. The best place for you to take a trade is not the 1 minute time frame. I would advise that, but you can choose to do your analysis on a higher time frame and come down to a 15 minutes time frame for position. Look for an entry position or look for uh, sort of confirmation candle or any candle that you wish to use as your confirmation before your entry. Okay, but for me personally, after doing these things, I already know that okay, I've gotten my direction of the market. I can come down to 15 minutes and 15 minutes time frame to take my entry, okay, to execute my position. So I normally use 15 minutes time frame to execute my position. Okay, so that's it for that, guys. Thank you very much, and please don't forget to subscribe, like, and share this video for more people to see. Okay, thank you very much, guys. See you in my next video.